Hello everybody, Happy New Year. The year 2023 has just ended and we're going to have a quick review and then an outlook into 2024. The review is especially since the start of this newsletter and that was end of October. And we had really a couple of really nice swing trade ideas that started to work out really well. We're going to talk about cryptos, then the futures market, and then in the end the Forex market. I'm going to talk about the Forex market more over the next weeks and months to come. So we had a long-term entry signal here in Bitcoin, the crypto market, as of end of October, and well, this is based on a multi-month pattern, an S1 pattern. We had a very precise entry and stop. And if we look at the monthly chart, we can actually see how this is a very, very low risk idea. The box marks the entry and the stop level. Well, since this entry signal, Bitcoin has moved from 32,000 to over 40,000. So that's already a 30% increase. And we have not yet taken out the first stop line level. We're getting close here, and it looks like we're going to just continue a run. So this first leg into a multi-upleg exponential bull, new bull, it looks like it's going to continue. We have another S1 pattern here, which is running its course right now. And it looks like we're taking out this top run level, and then we're already going to break the consolidation high and break above the 70,000 level. Well, basically then we're shooting towards the 100k, a very important psychological level, and then in the end this exponential bull cycle should bring us to or beyond the 500k level within the next 1 or 2 years. We had as well just recently actually we had a long-term entry signal just a few weeks ago in Ethereum. Ethereum came later to the picture, but it looks very bullish here too. So I'm very bullish overall cryptocurrencies, and it always starts with the biggest coin, which is Bitcoin, and the second biggest coin is Ethereum. Now let's have a look at the futures markets here. The Dow Jones on the beginning of December, I was bringing out a weekly newsletter talking about this long-term entry signal. So once price broke this last high, this is based on an S2 turtle pattern. Well, this has initiated a long signal, right? Entry here, stop here, and as well, if we look at the monthly chart, this is a very low risk idea, and we're basically looking for another move of that sort. So the target is somewhere up here. We get a reward to risk of around 8 to 1, and it should actually go beyond the target. So this has moved nicely too, and it looks like we're going to break soon the consolidation high, and this should then develop more momentum. We're basically looking for a very similar momentum move. So we're looking for bullish monthly bars intermixed with only 1 or 2 month pullbacks. So it's a very strong and very smooth trend, and we're actually looking here with the US equities or the stocks overall. We're looking for a market that is going vertical. We should actually see how this market is accelerating to the upside, and this is a starting base, and we should actually see here now things getting starting to get vertical. Let's have a look now at another future, which is gold. I've published another newsletter on the end of October about the wonderful prospects that gold, or precious metals in general, has. We can look here. I mean, these are, I mean, we should see a massive stop run move. And when we I mean, it's always good to look in the past, and we should actually see something similar to what we saw here. Again, we should see a series of bullish, very bullish bars intermixed with only 1 or 2 bar pullbacks, right? So this is a long-term chart, a monthly chart, and I mean all those futures, they can be traded in the very low time frames. If we get back into a very strong and smooth trend like that, this will be the trader stream to be traded in lower time frames as well, 60 minute, 50 minute, 5 minute, 1 minute, even down to the second charts. So this is very bullish. We've got a series of stop run levels here going back even to 2011, and should we start to break basically this consolidation high of this S1 pattern, we could actually get this could actually be the starting point for another long-term bull. This is the stop run level, and this is very close by, so we could actually take those out at the very same moment. Looks very, very bullish. When we talk about gold, well, actually silver is very close, right? It's the small crazy brother. So with silver, we have here an S1 pattern on the quarterly chart. We have only seen a first leg in a multi-leg uptrend. So I mean, you already see that I'm very bullish. I mean, crypto, I'm bullish anyway, but as well for the futures, what we're looking at is a commodity super cycle for the next 10 to 12 years. So we're looking for a very bullish, super bullish environment over the next decade. And this is based, and we can see it as well in the patterns, right? This is an S1 pattern, a multi-year S1 pattern. There's a lot of energy stored. And we have seen the first energy release. Price is basically tripled for silver here from 14 to well above 30. And well, this is the first leg. This is a consolidation, and once we get out of it, once we start moving, well, we should see prices well above 50 and actually going towards the 200 and beyond. Now let's have a look at the Forex market. The Forex market is the biggest market there is, the most liquid, much more liquid than the global futures market. And of the Forex market, the euro dollar is the most important pair. So this is why we want to look at the euro dollar first, right? So what we see here is that the euro dollar tried to break the par level here, the one with the quadruple zeros. This is not a break. This is just testing the level. This is not a stop run level either. It's just a test. And well, the test was not successful for a break lower, so we see a technical bounce. Well, we knew that before, that most probably it would bounce into the 21 moving average. And we got another, well, and beyond, right? Now we got another bounce to the other side. So now basically, well, we don't know what the market is going to decide either from here, or we're actually breaking the par level. Then we should see a surge, a strong fall in price. That means that the dollar gets actually stronger, right, towards this target area. Or if this was it, if the bears were not able to break the par level, and then if the bulls are as strong to break this upper green level, well, then basically this multi-year S1 pattern comes into play. It's a more than 10-year pattern. A lot of energy is stored. I mean, should we re-break the green line, well, we should see the dollar getting weaker and weaker and weaker, and that should fuel then the futures market. The futures market will start to get crazy in terms of bullishness. So the market will tell, and we have other currencies that have been already doing really well, which is the Swissy. If you look here at the Euro-Swiss chart, well, we see how it is very, very bullish for the Swissy, and how it's resuming its overall downtrend. So these are fantastic markets to trade. Let's have a look at the US Swiss. The US Swiss as well. It's not a surprise that the Swiss is strong. This is an S1 pattern back here from I think it was 2016, 2017. That's a short trade. It never got triggered. The initial stop loss never got triggered, but it takes its time, right? The longer it takes, or the more energy is actually stored. Now this is a pristine stop run level, and this is one, and we have just this last week, we have broken this important level from back 2016. And we should actually see momentum going on. And when we talk about the Forex market, we talk about the big currency shifts. These are big price moves in the currency market that should last a bit similar to the futures markets for the next 12 to 15 years. And the Swiss is one of those important, very strong currencies. So it's a bit rare. Both currencies, the US dollar and the Swiss, they're global, they're reserve currencies. Well, the US dollar is a global one, and the Swissy, well, that's a small market. It's a bit more relevant for the European side. And that reflects that there might be some geopolitical tension or anything else coming up that will lead money rather is looking for a safe haven, not in the US dollar, but the Swiss. So something is going to happen, either on the financial side or geopolitically. Let's have a look at the US yen. So the yen pairs have been weak across all cross currencies. We can see here, this was a huge move, right? This move didn't come from nowhere. This is an S1 pattern, and this move is a stop run move, taking out all these stop run levels. Target area is up here, and actually the Bank of Japan started to intervene at these levels, and just recently as well. I don't think the move is over, and we should see the yen to weaken even further into the next year and the years to come. Now, if you combine a strong currency, the Swissy, with a weak currency, well, what we get obviously is a very strong trending chart. And this is one of those. It went from 110 to 170. It has just achieved its target area, the big number, 170 with quadruple zeros. And we should actually see here, should this level break, a stop run move. So these are beautiful, beautiful charts to trade. Let's have a quick look at the two more. The pound odd again here. We've got an S1 pattern. We had an initial move taking out this stop run level, and now we have a pullback. And what we should actually see is we should see pound strength against a weakening Australian dollar, and we should actually see not only the consolidation high to be broken higher, but as well to take out this stop run level and then move beyond. One of those charts that I really like is the pound New Zealand. I see that as very bearish indeed. This is one of those examples where we've got a pattern within a pattern. So this is an S1, and right after another pattern formed, and as well it takes its time, right? And the more time it takes, the longer the consolidation is, well, the more energy is stored. So we basically have double pressure, two patterns here, and we should see a similar move to what we saw here. We should actually see coming out of out of the right side of the chart. So I'm very bearish pound New Zealand, so looking for a strong Kiwi for whatever reason, and a weak pound. Looking forward for 2024, exciting times indeed. Thank you.